Leaders of Tomorrow, India's largest platform for entrepreneurs. Anything and everything that you have related to any aspect of your business, we cover it here on the show. Tonight, we're bringing you a special series talking about the slew of IPOs that we've been seeing here in India, all of 2020 and 21. We're calling it the gold rush. Should you be investing? Should you not be investing? What should you look at if you're investing? And what should you as an entrepreneur put in place if you're thinking of listing your business? All of that being covered on the show tonight. Let me dive right in and introduce our panelists. First up, we have Sanjay Mehta, founder of 100x.vc. We have Satyen Shah, head investment banking, Edelweiss Financial Services, and Piyush Nagda, head investment products, Prabhudas, Lilladher. When and why should they be looking at tapping the primary markets if you're an entrepreneur?
We look at various line of IPOs which are happening across, and it's gratifying the way SEBI has relaxed the rules and made this possible now for Indian startups to create an IPO listing. So amazing journey for entrepreneurs and investors, both alike, for next decade.
We were discussing checklist for an enterprise, for a business, for an entrepreneur to know that they are IPO ready. How do you know you're IPO ready? Satyen, to you first, open to all three of you. But Satyen, you said it's part of the evolution journey of a business. So does this necessarily mean that if you've gained some sort of size, 5-10 years, then perhaps, the one or two things through this show that you'd want to advise our viewers to say, this perhaps is how you know you're IPO ready. This is what you should do to ensure you're IPO ready.
I personally apply this, SPS, acronym that we've kind of coined, scalability. So, is the business scalable? As an entrepreneur, is my business scalable? As an investor, when I'm looking at it, is this business scalable? Is the opportunity that they are playing is large? Two, predictable. Are the numbers predictable? Because investors do not like to invest in any companies where there is a complete topsy-turvy kind of there is no predictability or visibility on earnings. So are the earnings predictable? And last is sustainable. Is my business sustainable? Does the business model have a moat that will attract investors, that when competition comes up, you are still going to stand up against them? I think if these are the three key things that I would kind of put out. Obviously, management quality is a given. Governance is a given. You have to have good governance. Without which you will not have the right quality of investors backing you. But I think these are the things that from an investor point of view one would look. From a company point of view, again, I would put the same principles, that I think the company is ready to go public when he knows the answer to these three questions. If the business is something that is not going to be predictable, public investors will always find it difficult to invest, because they like predictable businesses. You do not want that one quarter is a great jump, the next quarter you don't know what you're going to do, third quarter is again up. I think people like predictability in businesses, especially on the listed side.
Okay, Sanjay?
I mean, for me, it's always going to be the size of the business, right? So unless the startup size has crossed across anywhere around 1,000 crore plus of revenue, that would be the right mark in terms of start thinking about getting the asset listed on an exchange. I mean, smaller businesses, while my colleague mentioned about can be scalable, predictable revenue, but if the size is very small, it doesn't help getting listed. So size of the business is going to matter across. So I would see across saying that if the company is raised up till Series B or E, kind of stuff, at least 500 million kind of in fundraise. The scale is there of the business with the size what is required across, and there is quite a good amount of headroom for them to consume large amount of capital, right? So the idea is, unless there is a hunger for resources and investments to grow, companies will start faltering, right? It might be a good exit for existing investor, but for incoming investor, it might be a business which will turn out to be a living dead kind of stuff. So
Okay.
I
Okay.
would say across the growth and the size of the business are two things which would attract, or I would say across entrepreneurs should start looking at IPO.
I just like to add that investors have become more matured in terms of the perspectives which are changing in their minds as well. So a couple of years back, typically people were looking at traditional business models which were profitable, and then they used to get onboarded on the exchange, and then the journey used to start. But
Sure.
now a lot of investors have inculcated or imbibed this understanding that many startups who are backed by good angels or PCs or VCs could become a great
Yeah.
idea, because the angels or VCs and PCs bring a lot of different kind of synergies and advantages to a business when it is growing in a growing growth stage. They bring their networks. They bring a lot of different perspectives where this direction, the way business is running and the way it's going and the way it adapts to the changing situation, it's much better from a solo traditional businessman who is running a business. So when the
Sure.
overall business models in the economy are changing, a lot of now investors have started talking to us or asking from us that which are these good companies who had been backed up by good VCs and PEs or investors, and now they're planning an IPO, because they could have been very well managed company, because VCs would have mentored them or coached them in a different way.
Okay. Satyan.
One thing I would also like to add is completely agree with Sanjay that only when the stage is ready, D, E, whatever stage. But I think more than revenues, I would put a resulting market cap, at least from a main board exchange point of view. If the resulting market cap of the company is really less than 2,000 crores, institutional investors will normally find it. They would want that as a minimum benchmark to kind of look at, in terms of investing. So if the resulting market cap is only going to be say $100 million, then I think it's definitely a little too early for the company to think of going public.
Okay. Piyush, I just want to go back to something that you said. Perhaps is the trend showing that more businesses right now are preferring to go the IPO route versus raising funds from VCs, Ps, etc. Is that possibly something that we can say that that trend that we're looking at?
I'll second what Satyen said here. Uh,
Hmm.
you have to you'll be IPO ready when you have reached a certain size. Otherwise, a lot of these
Hmm.
institutional investors won't touch you in the main board. So now there is
Sure.
another segment called SME platform in exchanges
Yeah.
which offer you, the small companies an IPO route. So we have seen in past that many of these mid-sized companies, these are not small companies, they're still mid-sized companies with a decent size of their balance sheet, and these guys are opting for SME route as well. And then the companies which are in a very early stage, they don't have a choice. They have to go to angels and VCs or the seed funders
Yeah.
initially at a very ideation stage, or when they're in a very very early stage of their journey. So
Sure.
there are distinctively three four different sets of verticals: small company, mid-sized company, and Zomato. Though it's a startup, but it's a very very matured
Yeah.
company, and the size
Yeah.
warrants them that they can directly come to the main board.
Gentlemen, I'm going to take a quick break on that note. We're back in just a moment. Welcome back with us here on Leaders of Tomorrow. And tonight, we're continuing to analyze the IPOs that we've seen here in the country, what you should keep in mind if you're looking at the IPO route or if you're looking at investing. All of that on today's panel. Looking at the list of some of the IPOs, there are a few that are coming up on our screens as we speak, and we were discussing some of the names. A large percentage of them seem to be digital first, tech first. So I would love to get the thoughts of this entire panel on whether we are going to primarily see that as a trend, that we're largely going to see tech businesses, because of the optimism, because of valuations, etc., looking at the primary market. Sanjay, to you first. If you were to stick your neck out, one, talk about whether this is a trend that's here to stay, and two, let's get some free advice from you here on the show. What sectors, what stocks would you like to lay your bets on?
Idea is, whenever a startup is getting listed, but obvious, I would take an assumption saying that they are already funded. Now, most of these funded startups, either they are tech or tech enabled, right? And the reason why investors get attracted to these stocks or this assets is non-linearity, right? These are businesses which are all non-linear. So, for example, if I'm, let's say, a property or a construction, I will have to buy a land. There is a linear process, and for me to make revenue, it is always going to be per unit what I construct across. But if it's a, let's say, a software, a tech play, I build it once and sell multiple times in millions kind of stuff and make money off it. So all these businesses are, non-linear, and that's where the whole attractiveness comes across. So yes, these are businesses are going to be tech or tech enabled, no doubt on it, right? It's always going to be tech or tech enabled. And as the quote says across, software is eating the world. So every business is now getting driven by software. So I think this
Yeah.
is here to stay, and future is all tech.
Satyen, Piyush, do you want to add to this?
Yeah, I think just one historically you've always had financial services as a big component of a big a sector that has contributed largely to fundraising in India, and
Sure.
technology so far has been absent. So we obviously I second that you will see a lot more tech companies going public, a lot more digital companies going public. But if I were to add a couple of more sectors where I think a lot of interest would continue to be there, I would probably pick financial services. You are seeing some very good quality financial services companies that are yet unlisted and will go public, and you are also seeing a lot of more activity in the specialty chemical space. So from what was there earlier, so specialty chemicals, financial services, and healthcare, I think are three other sectors outside of technology that I would see a lot of action in.
Okay, Piyush?
I'll try to break this between in two concepts. One could be the B2B models, the companies which are working in that B2B space, and then the companies which are working on B2C space. Now, in India, typically, you have seen both the kind of startups who which are typically trying to come on board. So we saw a couple of very good, great ideas like Route Mobile was one of the B2B players in the market, and versus Zomato is the B2C player wherein they're connecting with the last mile customer. So both these spaces are offering great opportunity, and I agree to Satyan that of course I also being from the financial service perspective, we see a lot of innovations happening, and the client acquisition and all those aspects which we used to struggle had become much easier
Sure.
through a lot of these innovative startups. So tech and edtech, these are two areas which we are very bullish on. And within that space, you have to be selectively looking for ideas which should be on a B2B side or a B2C side, because still there's a lot of scope on either of these segments. The only difference is on the B2C side, you will see the ideas which are very heavy on the cash burn side and loss making for a longer period of time. And the moment they reach that inflection point, typically they can disrupt the whole market, because slowly we are going to a situation where it's becoming a leader take all market, where the person, I mean the company which has basically 30, 40, 50% market share will keep dominating it actually, and making the entry
Okay.
for a newbie is very difficult. So this is the entire perspective when we are right now looking at the companies which are coming for IPOs from startup space.
Okay, very briefly, one last question before I can take closing comments. I want to discuss valuations. Any comments on valuations, gentlemen, that we could perhaps look at, given also how much money, from VC space, some of these businesses have been raising. So, anything that any of you would want to add on valuations on the primary markets?
So maybe if I'll go first, I think for all new issues that you've seen, I think one indication also is that how have they performed in the market, once they've got listed, and if you see go and analyze the last entire 1 year, I think almost every issue that has come has made money for investors. So whereas one does feel that our valuation is very high, is this a bubble? Because that's a question that we often hear. But one way to look at it is, IPOs have always left value on the table, and in the end, I always believe market is always right. And if all those IPOs that have come and have traded higher and sustained those levels and stayed there, clearly they have left enough value on the table for investors. And more importantly, see, valuations in India, you also have to look at it that an incoming investor always looks at it from a future perspective, as to that if the company is in a certain growth trajectory, what is it that is going to do next year and the year after. because especially for coming back on the year of a COVID, this thing, everybody believed that FY21 was aberration year, and therefore you should look at it on a full year, actual sustainable year, and then look at how valuation should be.
All right, let's then quickly take closing comments on today's panel. It's been an interesting discussion. I think we've covered most points. As we're closing, let me come to you then first, Piyush. We were talking about how the regulatory mechanism at this point is such that, with the easing of norms earlier this year by SEBI for listing of startups, we're seeing perhaps this rush, this gold rush, like we're calling it here, on the leaders of tomorrow. But just in terms of the mechanism itself, anything by way of closing comments you want to leave us with, Piyush?
So a couple of things working in this space. One, the SEBI is liberalizing a lot of norms and helping these new ideas to get onboarded through IPOs. But if you look at from investors' perspective, a couple of years back it used to take around 15 to 21 days cycle for an IPO to materialize and the investors to get the shares. The whole mechanism was very, very physical. I have to sign a huge form, and then I have to go to my bank, give the check, and do all
Yeah.
that kind of stuff. So from an investor perspective, very few people used to participate who belonged to stock markets. And slowly and steadily, SEBI started changing the rules, and with the help of a lot of innovations, ASBA came in. ASBA facilitated the IPO application, and it accelerated the whole process and made it very easy for any common investor to literally block some amount in its bank and apply for the IPO. And then now UPI has come. So if you look at the overall evolution in the IPO space from a retail perspective, the application has become, or bidding for the IPO has become very, very easy. And with all new age digital platforms coming in, we are seeing a lot of influx of millennials coming and applying for these IPOs with a click of a button. So all these
Okay.
changes, including the regulatory change and the innovations which are happening on the transaction cycle side, are making these things very heavily scalable, because they are now simple, they are easy to understand, and they are being conducted on a secure platform. So it's a great combination for the overall market, when the investors are literally participating in these large numbers because of this ease of application and the whole transparent model, which SEBI has
Sure.
literally done a lot of positive points.
Sure. Satyen?
No, to your question, I think as an entrepreneur, I would say that IPO is a very important milestone in the company's journey, and with the way markets are today, I think it's a very conducive time for entrepreneurs to look at going public. Investors are extremely keen for new ideas. Market is very supportive. The regulator has been very supportive, and as long as you meet the right size requirements, I think it is something as a product that one should definitely consider.
Sanjay, I'm going to give you the last word. Wearing your mentor hat, what advice would you want to leave our entrepreneurs with?
I mean, just to give you an overarching statement, India is
Yeah.
the third largest startup, kind of economy. We have got the number of startups third largest in the world. So we are at an inflection point. For example, at
Sure.
100x.vc, we fund 100 startups every year. And the way we are looking across is by 2025, there would be 100 odd unicorns in India, which is going to be maybe earlier 2024. It's going to be a great run for all entrepreneurs and investors alike. So startup is the place where everybody should begin across. There is a lot of value creation which can happen early if you get into it. And definitely at a late stage, IPO for retail investors is already now open. And thank you, SEBI, to making it happen.
All right, gentlemen. Thank you very much on that note for joining us here on Leaders of Tomorrow, completely out of time, on this very special conversation. Do let us know what you thought of today's panel, and if you have any feedback, as always, we're all ears. Thank you for watching. Have a good night.